So yeah, before we start, our favorite disclaimer, none of this is financial advice. Take this as education, learn from it, do your own research, and then, yeah, apply it as much as you can. And if you have any questions, always feel free to ask, and we'll give us our opinion. But that's all it is. It's just an opinion, right? No financial advice. With that out of the way, let's go for it. Let's see what questions we have today. What are you guys looking for?
I'm mostly just wanting to learn more about technical trading, so just watching for me is going to be great.
What do you mean by technical charting? Explain that to me. What are you looking for?
Like, I'm just learning to use the moving averages to follow the trend and when to get in and when to get out, those kind of things.
Okay, sure. Yeah, so SPY is a good example, right? We can use SPY, and I'll clean this up a little bit. I have a few channels on here. Sorry, guys. So yeah, so this is how we opened up, right? Today, like if you were in, let's start with what everybody likes to do. Let's start with options, right? Like if you looked at SPY options this morning, we're on a 5-minute chart. We generally try not to trade in the first 10-15 minutes because it's just so volatile, and you can see this. Like we went down, huge candle. We went from like 568.77 all the way down to 566.38. That's $1.50 move in one 5-minute candle, and it did the same kind of stuff over here as well, right? But with that said, it did a pretty perfect, like the level that we had for today. It kind of closed the candle over here, then went to our 60 EMA. I like to use EMAs. You can use moving averages if that works better for you. The reason why I like using EMAs is EMAs put more weight on the front of the chart rather than the back of the chart. So like, for example, if I'm using a 20 EMA, which is measuring 20 of these candles, it's going to give more weight to what's happening right now compared to what's happening in the last, like, let's put it this way, it's going to give more weight to the first 10 minutes, like the last 10 minutes, compared to the 10 minutes before that. So it gives you a better idea. It just skews the data a little bit to what's happening right now. So that for me works a little bit better. You can also use moving averages. I don't think there's any harm in there. Like you just have to adapt your style to it. So that's all. So if you look at it over here, we came down to the level that we had looked at in the mega cap level that's also provided. But we had also seen that this level had bounced before pre-market over here. It bounced right over here, went up to the 60 EMA, got rejected really nicely, right? Like just wicked over here, wicked here again, and then started coming down, and then broke down of our level of 567.17. And if you wanted to be safe, you could like go down to the psychological 567 level. By the time you were at 567, you were already under all the EMAs, right? The 200 EMA is already like way high, but you were like now under the 29, and for me, you're now even under the 5 EMA. Now the 5 EMA is, a little excessive, to be really honest. We did this to prove a point the other day, but I kind of like kept it on because it was just nice to have. But I think it's a little excessive. But you can see, like, when we saw this break down below our levels, it never really reclaimed that back up, right? So if it broke down over here, even if you weren't to be safe, you took it at 566.7, whatever. And this red candle, if you took it over here, 566.73, because you wanted this to break down, or you wanted to be really safe for some reason, and you said you wanted to break, retest, and confirm the drop. Like you took it somewhere over here, like because it broke this level, then went back up, retested it, never broke above it, never broke above the 9 EMA, never broke above the 20 EMA. You could have taken this over here, like 566, and then you could have ridden it all the way down to this level, and then this level as well, 563, right? Like we try to trim whenever we're decently in profit. Now over here, it kind of hovered around, broke above over here. Like if you did exit over here, like if you didn't exit over here, or over here, then you knew when it started to go back up over the EMAs that this was your exit sign, right? because it was starting to test the EMAs, it was starting to test the levels, it was starting to go up. Um, but what happened after that is that once it tested this level, came back down, now it really, I mean, once or twice over here it did, but kind of like just stayed below the EMAs. So if you didn't panic like I did, you could have done this level down. Like this is all below the 9 EMA. Yes, we wicked a little bit above it, but all our bodies, if you can see, was below the 9. Like it just kept going below the 9 EMA. I don't even know where you could have taken profits, where you would have stopped taking profits, because I kind of ran out like really early, like somewhere over here. I think I sold like, yeah, somewhere over here, 2 or 3 o'clock, somewhere over here. And it just kept dropping out. So if you had more contracts, more power to you, you could have definitely done it. But it shows you the trend, right? Like we were always below the EMAs. We wicked a little bit, but never really closed a candle over it. So you could have taken a put and ridden all the way down. Now the problem with this section that I always feel, especially if you're doing 0 day contracts, is that there's going to be a huge spike in price when this happens, and then a huge crush when this happens. So I always say to take profits, right? You could have taken profits at multiple levels. We went down from, I don't know, like 566 all the way down to below like 556. So like we're at $10 move. That was absurd. But you could have taken profit at any of those levels and made a killing off it, to be really honest. So that is how, in very short, I mean, we've had a few classes about these where we've done EMAs and different indicators, how different indicators played out over here. But I think that's going to take a long time. But the short of it is, that's how we utilize EMAs to guide us what side the momentum is, and when it starts to break, and when you should exit your position. Does that make sense?
Yes, I have a question. If the trend is strong, like downward trend like today, do you ever get in on the retracement, or you just try to stay out and wait for it to start down again?
So it depends on how strong I generally try in this market to get a confirmation. We've been moving so hard that it's easier to move once you get a confirmation. And I understand that if you get in over here, the price that you get will be much lower compared to over here. But that's more for contracts which are like really close to like 0 DTEs or 1 day out or whatever. Like those are the ones where the implied volatility really really helps you or kills you over here. But if you had like longer dated contracts out, I would just get in once you got the confirmation. Once it went up, and it started to come down, broke below it, you could have entered over here. Or you could have gone down, come back up all the way over here, and then you saw that it never really broke up, you could have gotten in over here and be fine, right? I generally try not to, because we've had these weird instances where it just reverses madly. You could be down 1.5%, 2%, and it could reverse a 1% all the way back, and you would be absolutely crushed unless you have like an excellent stop loss. So if you can manage your stop loss really well, this is fine. You can see it. I did not see, like, I use EMAs more than these solid levels, because we've just been slicing through levels every day. The EMAs guide you a little bit better. Like once you break EMAs, we usually saw momentum shifting, like especially when you saw it over here when it broke up, like it did a 556 to 561. This was a $5 move over here, $5.50 move almost, or $7 move almost. So you can get really crushed. You would think that this is a retracement and it would just keep going up and like really crush you over here. So that's why in this type of market, I don't like to do it. You could call me a chicken, but that's just me playing it a little bit safe.
No, the only one I really considered is the one you're pointing at now. I don't want to jump in and out of those little tiny ones. I was just curious about when it feels like it's starting to run up. Yeah. Obviously, we don't know how far.
Yeah. So if you the part that I always say about this is your entries really matter, right? Like if you got your entry over here, this retracement wouldn't, like, you would probably be at break even at most. You would have probably taken some profit already, like when your levels broke over here. That is why this level was so important, right? When we went down what, $5, 567 to 563, $4 over here. That was a good move. If you took some profit over here, like if you took some off the table already, then yeah, you could have, you could have added maybe over here because you took some off already. You could have added some over here. Your entry price was already um, higher, so hopefully this did not, like the implied volatility did not kill your contracts. So you should still be in the green when once this retracement happened. You could have definitely added and then, taken the ride down again or cut your stop loss. Like once it came to break even, you could have, um, cut it. But the entry price really matters then for your retracements, right? It really helps you. If your entry price is really nice, then it really helps you. Did that answer your question?
Yes, thank you, go ahead.
Okay, awesome.
Hey, in the zone, I have a question.
Hey, go for it.
Yeah, so when you do options on SPY, so do you do like zero DTE contracts or
These,
like it depends?
it depends to a certain extent, but so these days I'm trying to do zero DTs. I'll be really
Mm-hmm.
honest. And the reason for that is that the movement is so wild that you can really make a lot more with them.
Mm-hmm.
Fairly, like even if you're like a little bit out of the money. Like my contract today was, let me tell you. I mean, I don't even remember what price it was, but I was crying at the end of it because it had gone so far up. Um, Let me see. I posted in the journal.
And the reason for this ask is because nowadays I see the contracts on SPY are like way costly.
On what side?
The contracts on SPY, I believe they are a bit costly right now. So I don't
Yeah,
know.
because yeah, your volatility is just so much right now, implied volatility in it
Yeah.
that it is just
Mm-hmm.
it will be crazy. So yeah, so I had a 562 put, right? A 562 put, right? And I started when we were over here, when we broke below this.
Mm-hmm.
It's 566. So I expected that, we might get another, like we were already down 1.5%. Remember this, right? Like we were already down 1.5% when we started
Mm-hmm.
the day out, or 1.4 something percent, like we were down, right? So when this level broke, this is when I took my put. And I wrote this down. It came back up. I was a little below. I took a contract or two in this zone out. Um, and then I had two left. I saw
Mm-hmm.
this come up. I was like, whatever, it's fine. If it comes to break even, I'll break even, and that's a little bit of greed, to be honest. You shouldn't do that. It broke above the EMAs. I was watching the 60 EMA because the 60 EMA and this level was exactly at the same point at this hour. So I kind of watched this, and it kept on coming down after that, right? And by this time, we were already in the money over here, like around 115. Uh, we were in 562-ish territory, and I was really happy that this is good. I expected we would stop over here, to be honest. We were at
Mm-hmm.
2.2% down, which I thought who would go more than 2.2%. Apparently, I was clearly wrong, and it just kept on going down. So these days, because the fact that the movement is so much, you can make a lot more. Generally, I try to be out 1 or 2 days at least, uh,
Mm-hmm.
just because the volatility does not crush you. This part really crushes the contract price. When this
That's
happens, it like
yeah.
this is gonna go really nicely. Like this, the price increased really nicely, and the minute
Mm-hmm.
these three candles happened, it literally crushed all my profit out. Like or at least like 80% of what my profit was, it crushed it out completely. And I was like, come
Yeah.
on, I should have maybe taken more profit. But I was, like I was like an idiot. I was like, whatever, I'll just keep it, see how it goes because we've just been moving down. The general trend is down. Whatever, unless like we break these highs, unless we break this either opening high, 60 EMA first, opening high number two. Like these are two things that I was really watching for, right? Um,
Mm-hmm.
and
And mm-hmm.
so yeah, then I just watched it, and I kind of came out over here because I didn't think we were going to go anywhere down below 560, to be really honest. I think we came over
Okay.
here and I kind of sold over here, and then I cried after that because like the prices just went through the roof. Like I think it went up another 100% after I sold. So
Okay. And and what gives you confidence at 11 a.m. that it is not a trend reversal? Is it because you are looking at the EMAs and it is
Yeah.
kind of
So
following it?
yeah. So that's what we were talking about, right? This 11:40, this 11:35. The two things that gave me confidence to hold. I didn't know whether the trend had changed. I'll be really honest, right? I knew two
Mm-hmm.
things. One, we had rejected off the 60 EMA at market open, right? So I knew that the 60 EMA is kind of important. Also because of the fact, like if you look back, we've been below the 60 EMA all day, right? Like when the
Mm-hmm.
market opened at 4 o'clock, this is 4 o'clock in the morning. We have been below the 60 EMA. We've barely tested it. The only time we came close over here, tested it as soon as we opened. So I knew this place was really important. Like the 60 EMA was really important. Uh,
Mm-hmm.
and then since I got in over here, like right when this candle broke, um,
Mm-hmm.
I got in at a good price. Let me put it this way: when the volatility wasn't so high, the volatility really increased. Like once this happened, once this move
Yeah.
happened, it really went up. Yes, obviously this was really nice as well, but this is what made me the money, right? And I took profit over here, and I think I took another contract like somewhere on this red candle over here, because my price was set. Like it was like an X dollar amount that I wanted, and I got it. And I don't know how to assess, like if this candle moves down an X amount, how much the money would go up. I have no idea how to calculate that. So in my mind, I put a dollar amount, whatever I think is close enough, and I just
Mm-hmm.
take profits. I'm going to limit it. Um, and then this kind of crushed it, but it never
Mm-hmm.
broke above the six. So the 60 EMA and this level, which I had gotten in for, were both at the same place exactly. So I was really watching for this. I was like, either I'm going to sell it at break even, which is going to be somewhere around over here,
Mm-hmm.
or this is going to just reject over here and go down. Right? I was like, if this rejects over here, I'm going to get like contracts really cheap at the same price over here. I'll just buy another contract or two so that I can ride the trend down, or I'll just sell it. And it never really tested it. So that gave me the confidence that it went down. And I didn't really add any, um, because I had my price set to whatever I had initially bought it at. I never got that price again, and it just kept on going down after that. The same thing with this one, even, right? Like it went up, and then broke immediately back down, right? Like tested the 9 EMA, 20 EMA, but literally broke back down immediately after that. So
Mm-hmm.
that kind of gave me the confidence. And like in the 1 minute, you can look at it as well. That is what I was looking at. I mean, the 5 minute is easier to explain,
Mm-hmm.
but this was the 1141, right? So this tested the 200 EMA, tested the 200 EMA at open, tested 200 EMA over here, came back down, came towards 200 EMA, came down, and then never really tested anything like the 200 EMA again. So you always have to identify on what time frame what EMA is being respected, right? Like again, if you go back, look over here, this was it was always under the 200 EMA, tested the 200 EMA, and then just stayed below it, right? So
Mm-hmm.
you just have to watch. It just takes a little bit of time and a little bit of patience to watch it.
Mm-hmm.
And you'll sell it early. I've sold it early multiple times, including today. Right? Today I should have, rather than selling it over here, I sold it at 239 or 240. I was looking at it right now. I sold it
Mm-hmm.
at 239 because it was just like wavering in this time frame. It was wavering
Mm-hmm.
over here, and I was like, whatever, I'll just sell it over here. And it came down, tested this, and I was like, I did a good job. I sold it right over here. It came back up. It's likely going to go up, and it tested this level again, and then just literally fell off a cliff again. Like it did a 5 feet, like another $2 down again. And my puts were like 562, so like I was like way in the money. Uh,
Yeah. Yeah.
so you sell early, right? Like at some point,
Mm-hmm.
I guess enough is enough, or you've had your emotional toll on it as well. You just keep watching. Oh my God, this is gonna go up. Oh my God, this is gonna go up. It just takes its toll on you as well. Like I'm not that seasoned, I guess, so it takes me a while to.
Yeah. I think you still held it for long. I would have sold it between 12:30 and 12:45 when it started to go higher. Maybe I would have had some stop loss which would have got kicked at
Yeah,
between 12:30 and 12:45. So I think you did a great job.
12:30 and 12:4, like over here, 12:30,
Yeah,
12:35.
yeah. Like with this spike, yeah.
Yeah, you just have to like visualize your bigger trend, right? Like just move it out and
Mm-hmm.
realize, and the entry price again matters, right? Like you came in over here,
Mm-hmm.
right? If you got a
Mm-hmm.
good entry price, you would have never have been negative, right? You never like went
Mm-hmm.
to zero, like your profit never went to zero. You were never even
Mm-hmm.
close to break even. You were always um
Mm-hmm.
positive, right? And that kind of gives you a little bit more encouragement to hold. The minute this 200 EMA would have broken over here, I would have probably, because we tested it over here as well, right? I would have, like, the minute this would have broken, I would have probably gotten out, because then this would have broken these levels, like then it would have come up all the way to over here, and would have pretty much would have been close to being stopped out, either like just in profit or at break even or whatever.
Yep, got it. Yep. I think entry is 80% of the work.
It is, to be really honest, it really is. The rest of the 20% is just the emotional ride of going down.
Yep.
I was looking at this the other day as well, right? Like, you just have to realize that this is your trend. Like, I was looking at it, like, this is a 2-hourly chart on this way. So this is your 2-hourly chart or whatever. I'm sorry about the lines, like, this is an insane amount. But this is the trend, right? Like, we have just been moving down. There's nothing else. Unless we start a major reversal on some time frame, that's something totally different. And yes, during the day, things happen. But most of your move has already happened. A 3% move is just ridiculous.
That's true.
You've already done it. Yeah.
Yeah. Thank you for that.
You're welcome. The sad part is I'm crying because I took an Amazon call right at the bottom. Absolutely, like literally right at the bottom. I don't even know why. But actually, I know why. Like, they had bottomed out over here, to be really honest. So I took a call right over here, and it went up really nicely. And my price to sell was at, I think, at 2.65, and it went to 2.61. It closed at 2.61, and I couldn't sell. And now I see that it completely went back down to this level again. So we make mistakes. Trust me, I still mistake at least a lot of these mistakes still, especially because I have a tendency to carry. I mean, this has a lot of time on it. This was for earnings, because everything's on a discount a little bit right now. It's a little bit of a risky play, but I'm just trying to tell you that we all make mistakes. We sell early, we buy early. It happens.
Yeah. And I see, like, the last 15-20 minutes are they're just crazy in one direction nowadays.
Power hour is a real thing. Like, when that power hour starts, whether it starts at 3 o'clock, 3:15, or 3:30 is a different question.
Yep. You want to be on that side.
Yeah, you want to be on the right side. That is correct.
I have a question about how you handle, like, right there about 11:30 when it broke through. I can't tell the colors on your EMA.
11:30.
But
You got it on the 1 minute or the 5 minute?
whatever you were on just now,
I was on Amazon before, but we can do SPY. I think that was a little bit more difficult to figure out.
Okay, so even like at 9:45ish, and there's all these bars that break through.
Yep.
The EMA.
Yeah.
At what point do you say, I'm going to get out of here, or do you decide that this is just testing this, and it's going to go back down? Does it just depend on the instrument and you just get to know that, or?
So, two things, right? One is, we try not to trade in the first 15 minutes. This part is just, I don't even, except for the fact how high it went or how low it went, I don't even care what happened over here. Because it's just too difficult to trade this. You will get kicked up, kicked out, too many times, because just the market rebalances a little bit as well. There's a lot of volume that comes in. If you look at it, like the first candle, look at these, how nice the volume was. There's just so much volume being traded that it's just very difficult to trade it at this point in time. So the first 15 minutes, try not to do that. It went down, it went up, it went down, it went up. This was a point where you have to give market time to settle and show you a direction, right? The second thing is we always try to trade with confirmations, right? So even if you look at this part, our downside level was this, so it broke down and then immediately reclaimed it back up. Like and this is a 1 minute chart, right? This is not even a 5 minute. If you look at a 5 minute, on it. Oops. Jesus. Sorry if I'm giving anybody vertigo. But if you look at the 5 minute never even broke below our level, right? So the first thing is, when we trade. The second thing is, watching our own levels that we set, right? Like where do we expect the market to pivot? These are pivot points, right? Like the levels that we post in mega cap, these are all pivot points. Where price has either flipped upside, downside, whatever you want to call it. But these are pivot points, right? The third thing is that you realize that where it started to get rejected from, and that was the 60 EMA on the 5 minute chart, right? And if you zoom out for just this morning, the price has been below the 60 EMA constantly, right? It has gone above and below. The green is the 9, and the red is the 20, right? It has gone above and below it multiple times, but it never really broke above the 60 EMA, let alone the 200, right? So in our case, the 60 EMA becomes really important because it's going to first break the 60 and then break the 200 if it's breaking it, right? So we've now identified three things. One, time. Two, levels, static levels, the pivot points that we identified, and three is EMAs, right? And then once you identify that, once it finally identified to you that, hey, we went down, came back up, went down, and then finally actually stayed down, this is what, already 10 o'clock by now. So this is where we kind of identify that, hey, this is the direction most likely, and then the EMA is guided to you how low we went. That's all. Now, nobody knows how low we're going to go. That's why we always say take profits, right? Like scale out always. Like this is what we say mostly for penny stocks, but even in options, nobody knows where it's going to stop, right? Like I don't have a crystal ball. I don't know. I knew the price was going to pivot over here, but I also know that at some point in the chart, the price has pivoted at 565. It has also pivoted at 564.44. It has also pivoted at 563.50. It could pivot at any one of these points. It could just go back, just change direction at this point. I don't know where it's going to do that. So the EMAs guide me a little bit. Hey, this is where the momentum is shifting, right? So that is, you can take profits before that as well if you have good amounts, or you take it when this is shifting. And then you can always jump back in, right? Like if you felt that you went down from here, you made like whatever 10-15%, like you had a long dated contract like 5 days out, 7 days out, for example, and you made 15% or 20% and then started to go up, you realize, oh no, it kind of just faked me out, it broke back down. You could have entered again over here because now you're under all EMAs. You can still go back and just ride the trend down again. The only problem with re-entering is you have to find a place that is good enough that if it comes back up, especially in a market like this where we have these huge candles, that you won't just get kicked out again and again, and somewhere else again. That's all.
Okay, thank you.
You're welcome. Wait, we've still talking about it. Any other thing that you guys are thinking? Dude, I have no idea. I wish I did about a reversal, right? I wish we all did, but I don't because if you look at the SPY chart right now, it is dumping back again. Started to come back down again. You know, um, maybe if Smooth joins us, he will probably tell us, when he can make a call to our president and figure out when we're reversing. If he says something good, we can reverse maybe, but for now, just keep following the trend. Trend is your friend.
Was there some news or something that came out today, or just when it starts dumping, more people dump, and then it just gets on a roll of its own? I've never seen it dump this hard for no reason. Means no reason.
I mean, yeah. So I think part of the reason is fear, right? Like people are panic selling to a certain extent as well. And then the tariffs kicked in today as well for China and I know somewhere else as well, like some of the other tariffs kicked in as well. And we're kind of frozen in this trade war. So I think part of it is just that influencing it, that we're not budging it, and this is going to keep on getting, we're very firm about it, right? About these things happening. And then, obviously and to a certain extent, there's fear and panic selling, right? People don't want to. We've now corrected about 8 or 9% of the SPY. That's a year's worth of gain that has been wiped out. Like we've lost now trillions of dollars in gains now, right? So all, people are gonna go from, people have just been moving away from riskier assets, something like this, which is gonna go down 8% to a 4% bond, like, right, or a 3% bond, for example, right? So if you look at the outflows, I'm sure, like if you look at SPY outflows over the last week and a half, 2 weeks, it's been like a lot. So any of the funds, they're being, people are selling just to protect their own capital and then jump back in when, market starts to stabilize and, is showing good signs of reversal. Because there's a reason why, things go down. Like if you look, I'll show you something. This is a tech-based chart. This is FNG, and I like to use it because it's just 3x amplified. So it shows this really nicely, but it's a leverage ETF, so it shows this really nicely, right? But you see how hard things dump, right? This is back in July of last year, where things just dump really hard, but it also went back up the same way, right? Like we had these huge buy candles, one red, but otherwise mostly green, right? The red ones were like minuscule, so really hard going up, and then it dumps back down, but then after that kept on going up and up and up. So when it starts to go up, things start to go up really fast. You see these big green candles, we stuck around over here, but then nice green candles again, then nice green candles again, stuck around over here, nice green candles again, right? So things come down hard, but then when they start to reverse because people want to pour money back into it, especially big money starts to pour back into it, this is where like the big moves happen, like all of a sudden, where you can gain back 10% or whatever, or 5 or 6% of from the lows. So people take it out like really fast, like the big money takes it out faster, but they also have a tendency to, go up faster as well.
Okay, I'm ready for the go up faster. Thanks.
Yeah, that's the crystal ball to identify, right, when we're talking about back. Yeah, this is like a really aggressive like down, right? You can this is tech based, by the way. This is FANG's, like Facebook, Apple, Netflix, Google, all of that. This is just a leverage 3x leverage ETF, and this is just going down. Like went from almost 700 all the way down to 350s. We're on like almost like a 40% correction already in it, which is just ridiculous. But then you realize with a 40% correction, when it starts to regain it, even if it comes back, this is 100% gain. So, people make a lot of money on these things when you can, and say, be greedy when people are fearful and the other way around, right? Like as Warren Buffett says, as long as, you're not being stupid at the same time. Anything else, guys? Tesla took the beating of a lifetime today. Jesus. But I don't trade Tesla, but probably should have traded it today. Jesus Christ, like this is, what a waste. Any other questions, guys? I can sleep, really? I can go to bed? You guys are so nice. You're gonna give me that today? Let me sleep early today? Alrighty. Thank you. So I guess we will conclude here. Like this is really weird, but sure, we will conclude early today.